Hey Rick,
Hey, Megan, how you doing?
I'm doing well, recovering from a 3-day weekend that I actually
Hmm.
took my 3-day weekend.
Good for
And
you. Good for you.
that was a fun family time. So I am here and I am ready to kick butt and take names and
That's right.
rejuvenate.
Good for you. You look great. So you're back from a
Thank you.
nice professional weekend.
Yes, exactly. I'm all ready to go. I just had a really fantastic lunch from Panini Kebab here in downtown Anaheim, and the food is so good. Next time you're over here, we'll go get lunch there.
Okay, sounds great. Sounds really good.
All right, so we're going to talk about um, some interesting facts about
Hmm.
being a loan officer
Hmm.
and some recent changes to your loan officer population and why it matters, why it doesn't matter, full-time loan officers versus part-time versus
Hmm.
somebody who does refinances versus
Hmm.
someone who does purchases. So tell us
Yep.
what the news is on the loan officer front.
Yeah, this is no surprise to me, of course, but I looked at the numbers today in 2021 nationwide in terms of licensed loan officers, there were about 160,000 licensed loan officers.
Mhm.
Right now, that's down to about 80,000 and it's
Mm.
getting lower. And so roughly about half of the people in the mortgage business are leaving. They've left the business already. And so, well, why is that? Well, we know we went through a period in time where rates were so low, it was kind of ridiculous. Let's call it what it is. 3% is kind of a crazy low rate. And so they made a living what I call by accident. They showed up in the business out of nowhere, right? The last job they had was who knows what. And now they got in the mortgage business and made a pretty good living just by showing up. Now, of course, the landscape has changed, right? We know that already. It's been changing over time. Rates have been moving up, the inventory is low, and so it's a different environment now. And so those people who made a living by doing simple rate and term refinances are really struggling to know how to structure purchase transactions because you and I both know that the transition from a refinance knowledge base to a purchase knowledge base is light years difference. And it takes a higher skill set, a much different skill set to navigate working a purchase transaction versus a refinance. And so they're really
Mhm.
struggling. They really, really struggle. They didn't have the skill set or the business set up to be able to succeed in this market. So they're leaving.
Mhm. Mhm.
That's kind of what's happening.
I know that I can guarantee that if you've done a refinance before, that your experience was a lot different than a purchase transaction. And even though
Right.
it's a loan officer and a loan officer, it's just all about, what they're used to doing and what the
Hmm.
guidelines are. And, you know, um, a purchase, it's like you got to be on top of
Hmm.
everything.
Hmm.
And
Hmm.
a refinance is like, snoozing the whole time. So, and the guidelines,
Yeah.
of course, are a lot different.
A lot different, a lot more challenges. I'll talk to a home buyer, for example, and they'll say something, oh yeah, I'll talk. My dad said he referred me to his loan officer that did his refinance 3 years ago.
Mm-hmm.
Yikes. I mean, okay, I get that. Well, first of all, that guy's probably not in the business anymore. Number two, he doesn't have the skill set to know how to structure your deal anyway,
Mm-hmm.
but
Yeah,
so it's not always a matter that you know someone. It's really a matter of knowing someone who has the skill set to get you to the finish line.
agreed. And it's, you have to look out for yourself, and
Hmm.
you have to know that this person can handle this purchase for you, or even a
Hmm.
refinance, really. You've got to do a little research and find out if they're a full-time loan officer. I mean, doing 2 or 3 deals a year for friends and family, that's not cute, in my opinion. You really don't know what you're talking about if you're doing just a
Right.
few deals a year. You're not an expert. I don't think you can call
Hmm.
yourself an expert. There's certain nuances and things that happen in our business weekly that you need to know what in the hell is going on in
Hmm.
order
Hmm.
to advise on when to lock a rate, when to
Hmm.
sell, when to buy, that
Hmm.
sort of thing. And so, yeah, if you're doing 2 or 3 deals a year, 4 or 5 even, you're not active enough to be an expert in something, you know?
Yeah, that's more like having a hobby. It's not really a
Yeah,
business.
exactly. Definitely have another
Yeah,
job if you're doing that. So,
for sure.
um, as a consumer, you just need to ask some questions and get some referrals. And if all the referrals are somebody who just does refinances, you know, then you might need to keep looking. And of course, you know, you can always call Rick for a referral if you're not in California or Nevada or Arizona.
Mhm.
Um, But and another thing too we were talking about was when a realtor has a listing and they're not so sure about the buyer's pre-qual letter that came
Mhm.
in, and they want you to double check things,
Mhm.
that's called a cross qualification. And so you told me that you've been seeing some really alarming stuff on these cross qualifications. Tell me what's happening there.
Yeah, it's interesting. I do a lot of those recently, and they'll send me what they call the DU, which is the underwriting findings, which is an automated DU findings is not the actual loan approval, but it is an automated loan approval. And so
Hmm.
that approval is generated by the data that that loan officer inputs to the system. And so they'll send me the DU findings, and I know how to read those line by line by line. And I'll see a couple of things in there. I go, well, your DTI, it's a little bit tight here. Tell me more
That's your
about your
debt to
income,
income ratio.
debt to
Yeah.
income ratio.
Mhm.
So I asked him to send me the income so I can validate the documents. In other words, send me the W-2s and pay stubs and so on. And I look at those documents and I'll analyze the income and let's see what your income doesn't add up here. What you have on your findings is not what I'm seeing on these documents.
Mhm.
And they'll say things like, "Oh yeah, don't worry, I'll figure that out. We'll make it work." Well, hmm, it makes me nervous. Yeah, we talked about this before over the years.
Yeah.
Hope is not a strategy. It's just
Mhm.
not. And so when underwriters look at these documents, they validate it. You just can't tell the underwriter, "Oh yeah, they'll make the payments, we'll figure it out." No, that's not the way it works. And
Mhm.
so you got to be super careful with that. And I'm seeing in some cases, escrow is falling out of escrow
Mhm.
because of the lending. They
Right.
run into some situation, and they typically run into that when it gets in front of the underwriter because they cannot
Mhm.
validate the documents. They cannot validate the income. They got something going on there.
Right.
And so you got to be super careful. You got to be very careful with that.
Yeah, it's no joke. When you're doing the business that we're in, and people are making life decisions and plans, and they're spending money, and they're emotionally involved and monetarily involved.
Hmm.
And so this is not the space for not a lot of bandwidth. Like you have to be able to
Right.
put these things together. You can't hope, you can't fudge numbers. I mean, income is what income is,
Hmm. It
and
is.
yeah, yeah. I very rarely have anything fall out because of financing or fall out in general. I probably have maybe one
Hmm.
a year, and it's usually some kind of, if it's an
Wonky
inspection
thing.
or,
Yeah.
but I had this loan officer that swore to me up and down that their client was qualified and that he
Hmm.
ran all of their, information. He had all their documentation, and he sent me a credit score. Of course, he sent me the DU. He explained the salary, this and that. Anyway,
Hmm.
9 days into it, all of a sudden he figures out that the borrower is married. And I thought, you haven't done
Mm.
anything. You said you did all those things, but you didn't do anything, because if
Yeah.
somebody's married, I mean, that shows up in more than one spot.
Hmm. Hmm.
So you just never know what in the hell is going on out there. Luckily, we were able to salvage the deal, resell the house for even
That's
more
good.
because of the market.
Yeah.
But, I'd rather
Sure.
not go through all that. You know what I mean?
Well, and then your point is well is a good point because those loan officers say all the right things. They're very convincing.
Right.
And until it gets in front of me, and then the story can change. I had a situation recently, a different one, where the loan officer was really, really mad with me.
Ah,
And I get it. You can be mad at me, I understand, but they don't qualify for this house. I can't get the
right.
numbers to work. And so we run into that. But very convincing pitch. Hey, they're great. I can make the deal work. They got high FICOs, they got the salaried income, etc. right to the point where they can't.
Well, hopefully this will be a wake-up call to people, as our market continues to change and people are in and out of real estate, that hopefully the people that are experienced and can do the best job will get the majority of the work without a bunch of static about
Yeah, every time.
amateurs. So, all right, Rick, I appreciate you. Keep up the good work. Keep
Thank
hope
you. Appreciate you,
alive
Megan.
because you have a plan.
Always, every
All
day.
right.
Thank you,
I'll
Megan.
see you
Appreciate
next
you.
week.
All
Bye.
right. See you later. Take care.